Jorge Montepeque, president and founder of Global Markets, to answer that question. Jorge, we've had plenty of time now to digest the cuts. So give me your considered take on that. And also, can you square the OPEC plus circle about cuts and projected demand?
Well, I think OPEC, as it is in their job, is to balance supply and demand, and very importantly, consider the impact on its revenues. And the revenues for OPEC were coming down as we headed into the end of Q3. This is the impact of the steady and unrelenting rises in interest rates. One is never sure about the impact of interest rates other than they decrease economic activity. And I think we have seen that globally. The impact is severe because the mortgages that people had to pay suddenly doubled in many cases, if not more. And as you divert your income into mortgage maintenance, your disposable income declines. So for OPEC, they had to consider that maybe the impact on oil consumption would be very, very large, and they needed to get ahead of the curve, and the oil prices were actually not cooperating. If you take that into account as to how the market has absorbed it, is the fall in prices stopped, the prices have started coming up, but they have not hit 100 yet, which is what we expected prior to the cut. Okay. So if we had been right in our expectation that oil was heading to 100, then oil should be like 110 or 20 with the 1.6 million barrel cut. Okay, so
but it hasn't got there, Jorge, has it? And you know, I mean, I understand what you're saying, but how then do you explain the unchanged OPEC plus forecast for this year, still 2.3 million?
I think these are economists looking at issues from one point of view and another set of economists looking at another objective. And I think it's more the market people looking at the revenue for OPEC. They really need to worry about that. But let me go into why I also think that demand is not shrinking. While the Federal Reserve has been increasing interest rates because of rising inflation, it is clear that the most recent data is showing that inflation is slowing down on a year-to-year basis. So while prices are still going up, they're going up at a much lower rate than last year. So the second-degree derivative is already negative. And this is because if you take any commodity that you can think of and you compare it year-on-year basis, the price is either even or much lower. Look at the price of LNG is lower. The price of copper is not screaming up. Everything is lower than last year at this point.
We had a big spike last year, of course, because of the war.
Correct. And it cannot keep spiking at the same level, right? So we are having lower inflation. So if you think as an economist, and I think OPEC has plenty of that, right? Is you will see that inflation, the rate of growth is slowing down. And therefore, this has to, as in has to impact Federal Reserve actions, and that they will not continue to increase interest rates at the same level they were. And one even needs to consider the possibility that they could cut by the end of the year. So if this happens, then demand for oil will continue to go up. But let me bring you to one key point, and then, of course, you carry on. The exports by China, as released 2 days ago.
Yeah, they were big, yeah.
They were huge. And the nearly 15% increase in exports is occurred while exports to Europe and the US decline. That means that that torrid, hot growth is because of consumption in what I call, and we all call, the global south. So demand from Latin America, Asia, Africa is overwhelming the previous torrid demand in the West. So the world is resetting in ways that we cannot imagine, that are not obvious to many of us yet. But what that means is that oil demand in the global south will increase massively this year. And that's another thing for the OPEC numbers.
What's your feeling on that? You know, the next big set piece of OPEC Plus is in June. Will they cut further? Will they increase?
I think they will have two options then: to keep production at the same level, or if they detect a strong surge in demand and prices above 100, to then restore some of the production. All the data coming in so far is that demand in Europe and the US, in the northern part of the world, will be muted because of the impact of the interest rates. But I generally think that in the global south, they're more accustomed to dealing with an inflationary environment and also with high interest rates. So for them, it's more marginal to change, because when you go from 10% to 12%, it's not as dramatic as going from 2 to 4, where you have a 100% increase. So I mentioned earlier, this is the rebalancing. So I think by June, we will be in the middle of the summer demand. Then it will be clear that supply is not keeping pace with demand. Do not forget the very important point that the US ability to flood the market and compensate on the Russian cuts or impact of them is diminishing by the day, because their inventories are less than half of what they used to be.
One question here, which has puzzled me for a long time. Saudi Arabia within the OPEC Plus organization seems to be enabling Russia, if you like. But Saudi and Russia are now direct competitors for Asian crude, aren't they? And Russia seems to be grabbing market share big time there from Saudi. How will this pan out long term? You know, how can Saudi be sanguine to hand over market share to Russia, you know, with regard to China and India, big consumers in Asia? Jorge, what do you think of that?
Well, the Saudis are extremely commercial. And if you look at their balances, they are increasing as direct investors the consumption of oil massively within China and Asia, because they're investing, buying refineries. So they're buying secure outlets. So you could take a point of view that they don't need to worry about any other competitor because they have a secure outlet, and they do. The other is that they are commercial. And you can see that right now. This is a very good example right now. The reason Russia is grabbing a greater market share in Asia is because Europe is willing to pay more for the Saudi oil. Because Europe has the sanctions and they don't have access to the Russian oil, they need Middle Eastern and American oil, and they're paying for it. So if you're commercial, you have to choose where you go. So it wouldn't be out of the realm of possibilities that Saudi Arabia itself becomes a customer for Russian oil in its Chinese refineries. And they should do that, just measure what gives them the best value. But I wanted to add something to what you discussed earlier. The changes we are seeing in the relationships of Saudi Arabia are extremely, in a way, predictable and simple to see. The West for many years has been telling Saudi Arabia and other countries, your oil is bad for the environment, we hate it, we will work very hard to not consume it, and that means that you, Mr. Supplier, you're gonna die. Meanwhile, China is saying, we need your oil, we welcome
We
your
love it.
business.
Yeah.
We want it. So what do you expect Saudi Arabia to do? To be allied with the one that says, we are going to kill your market, or to be with the one that says, come here and let's have some tea together, right?
Well, the room overwhelmingly thinks that the hydrocarbon industry should have a seat at the table, despite the backtracking by Europeans and some Americans. Jorge, I will leave the final word to you. I'm sure, I'm pretty confident you agree with that, but tell me why.
Well, there is a change in the air. I think the fears, which were very extreme, say 5-10 years ago, are declining. People can see that their lifestyle is not changing year on year, even if you count on a decade. And climate transition is a luxury. You can afford it if you're feeling
luxury.
Yes, you can afford it if you're feeling flush. And in the past year, a lot of people are not feeling flush at all. They're feeling poor. And their desire to participate in more budgetary expense and higher taxes is declining. A politician in the Netherlands already cautioned their parliamentary members that the appetite by the voters had swung the other way. This is clear in many areas. And the oil industry is definitely a part, not in the transition, but in the supply of well-being to the world. So why shouldn't they be part of the discussion? Because if anything, is a balance between the economies that can afford the luxury, the economies that cannot, and the ability of alternative forms of energy and traditional to balance energy demand. So they should be part of the conversation. And if the world decides to exclude them, which could happen by the environmentalists, then they're in a little room talking to each other in what I typically call the echo room. It doesn't solve anything.